So how's the market? This is the Q1 2020 update for the Rockingham, Essex, and Middlesex County markets. So the headline here is that sales started off really strong. In fact, they were the second strongest in 10 years, coming in 75% over the first quarter of 2019. So the market we survey is the Rockingham, Essex, and Middlesex County markets, made up of about 80 towns. And what we do is we pull data on $1 to $20 million sales for office, retail, and industrial and flex properties. So Rockingham County had 11 trades. Average price per square foot was $202. Cap rates decreased by 21% with an average price per square foot increase of $43. Essex County was the second largest in volume with 37 properties. Average cap rate was lower at 5.9%. In fact, that was a decrease by 19%. And we saw average price per square foot on trades increasing by 41%. And Middlesex County led the three counties with 77 trades, but cap rates only increasing slightly by 7%, and a dollar per square foot decline by 13%, bringing the average price per square foot down to $135. So year over year, the years were pretty similar, other than 2020 had higher volume with more transactions. In fact, we had 3.1 million square feet sold with 125 transactions versus the first quarter of 2019 at 107 transactions. So here's a chart showing the comparison between volume. This is inside the Q1 2020 Market Update PDF. You can download this on our website. It's free. You can take a look at it and study the data in more detail. So moving into how the market in 2020 is relating to the rest of the prior, say, 14 years, what we're seeing is that retail in the first quarter of 2020 started to show a slowdown. In fact, the average price per square foot, instead of continuing to appreciate, has taken a turn and leveled off. We expect that to probably come down this year in 2020 due to the COVID shutdown. Office, however, had a big first quarter, and we think that this is primarily due to investment moving out of the urban markets, coming into the suburbs and picking up office product, driving the average price per square foot higher. So this is a big move in the first quarter of 2020. We were surprised to see the volume pick up the way it did, but this is something that we've been looking at as a value story in the suburbs. So we think that there's an opportunity here, even as we come back to the office after the COVID shutdown. We're expecting companies to take a second look at the suburbs and start to see that as a more attractive alternative to working in the urban environment. Flex, we saw some correction in that market. The data pulled in for the first quarter had a sale in there at $15 per square foot, which was in Tewksbury. Is about 500,000 square feet that traded. So that may have thrown these numbers off a bit, and we would expect this number to come back up in the second and third quarters of this year. Industrial continuing to appreciate in value, a highly sought after asset. This is the projection for the 2020 year. You'll see the orange and white striped column here showing the annualized 2020 numbers. This has no market correction factor in it. So if we were to continue on track from the first quarter through the rest of the year, we would expect to end the year with a similar volume somewhere around 2015. Now, in terms of annual inventory turnover ratio, we pull every property that exists in the three counties, and then we take the average, we take the number of sales by year between 1 and 20 million, and we come up with what's called the inventory turnover ratio. Over the last 14 years, approximately 1.78% of the inventory turns over. So you can see here the trend line for the amount of property that's selling in a given year by inventory ratio, and then looking at that relationship in its correlation to the long-term average, which is shown here in the blue dotted horizontal line, that 1.78%, when that long-term average is crossed over, we're in an expanding environment. The market's more active than it is on average. Don't be alarmed by the 2020 year-to-date drop-off here. This is only the first quarter's number showing up. So what you're seeing here is a 0.7% figure for the first quarter of 2020. And then looking at the effective change in year-to-date sales year over year, we saw a drop-off in 2019. 2018 was a record year by volume. In 2019 was down slightly. So we saw a drop in the effective change in transaction volume. 2020 started to pick back up in the first quarter, which is why you see this line looking a little bit more like a 2014-2015 trend. We'll have to watch and see what the second and third quarters show for your transaction volume. So as COVID came out, we hit the pause button on the economy at the beginning of March, and we see this showing up in the sales data where a lot of transactions were paused in March and going into April. To be expected, a lot of deals saw extensions. We are starting to see more closing data coming out now in mid-April, and would expect those figures to start showing up and picking up here coming into May. 46% of the investors that we surveyed when COVID came out and we paused, we went out and asked what they were seeing, and most of them saw that interruptions to pending sales had to do with tenant instability and wondering about tenants being able to pay their rent. 62% of the investors said they still favor commercial real estate over stocks and bonds, and the market was sort of split. About 43% said that they thought we were in a recession in the market cycle. 39% thought we were still in expansion in the market cycle, with 11% stating that we were in a recovery and 7% in hyper supply. So 89% of the investors we surveyed are motivated by low interest rates, and 76% said they will wait to sell through the pause, and they want to see how the economy comes back and what kind of activity there is before they bring their properties to market. So when do investors plan to buy? Our investors said that 61% came in and told us that now the next 3 months they're ready to buy property. Some are going to buy in the next 6 to 9 months. In fact, that was 28%, and then only 11% said they were going to wait it out for over a year. So what we find, whether you're in the buying stage or the selling stage, there are 4 mistakes that investors make. One is either buying an investment too early in the market. One is buying it too late. Another is selling a property too early in the market cycle. And another is selling too late in the market cycle. So depending on where you are in your portfolio acquisition mode or portfolio disposition mode, having a conversation about where we are in the market cycle and how it relates to your value may make sense. If you think that's the case, I invite you to set up a consultation. We can spend 30 minutes on the phone together. We want to learn everything we can about your situation and your property, and we can customize this data to your specific property situation so that you can best understand the value that you have in the environment we're in. And then we would take you, after that call, you would decide if you'd like to look at an evaluation where we would show you how we would market your property and then execute on our 42-point sale process to help you make a smart deal. What we found is that 88.9% of our deals close on time and at the seller's accepted offer price, which means less hassle, lower stress, and more celebrating. So if you're interested in talking more about your property in this market that we're in, request a free consultation. You can click on the link below in the comments, or hit the button on the page, and it'll prompt you to schedule a 30-minute call. I'm Jeremy Surrier. Thanks for watching, and take a moment to subscribe to our channel. That way you can be alerted when we have new market data to share with you. Thank you.